Are you that trader that will always be like, why does the market hit me out before going my direction? Come closer, this video is for you. Yes, you know it, but out of 10 trades, you end up winning just one and losing 9. Liquidity is using you to play basketball. By the end of this video, you will understand why that happens and how you can minimize it. Today, we are looking at liquidity in trading, the ideology and concept behind liquidity. But first, what is liquidity? Liquidity is where orders, your buy stop and sell stop, are sitting in the market. In simple terms, it's where traders have placed their stops or pending orders and where smart money goes to grab them. Why liquidity matters? Big players, the banks, institutions, need lot of orders to enter or exit trades. They don't buy or sell randomly. They move price towards areas where many traders place stop losses. Many pending order exists. Those areas are what they call the liquidity pool. These are the common types of liquidity you should know as a trader. We have the equal high liquidity. This is when price forms similar highs. Traders place stop losses above those highs. Smart money pushes price above, grabs liquidity, reverses down. We have the equal lows, that is the sell side liquidity. When price forms similar lows, traders place stop losses below those lows or pending orders. Price goes below, grabs liquidity, then reverses up. Then we have the trend line liquidity. Traders place stop around trend line or below the trend line, as the case may be. Price breaks the trend line briefly, traps traders, and reverses. How can you identify liquidity? These are some of the steps you can use to identify liquidity. Look for obvious level, equal highs, equal lows. If it is obvious to retail traders, it is liquidity. But sometimes we traders, we are going to see that that particular zone that we are using as our stop or our pending orders are obvious liquidity. But because you don't want the market to leave you, you jump in. Watch for stop clusters. Ask yourself, where would most traders place their stop loss? That's where liquidity is. Another step is wait for liquidity sweep. A liquidity sweep is when price spikes above highs or below lows, then quickly reverses. This is your confirmation. Combine with other concepts. Okay, you should always combine. As long as trading is involved, one confluence is not enough. Always combine it with other confluences or concepts. Liquidity becomes powerful when combined with other blocks. Discount and premium zone, Fibonacci. And common mistakes we do as traders trading before liquidity is taken: ignoring higher time frame liquidity, entering at obvious breakout levels, not waiting for confirmation. Let's head over to the chart and see all the gibberish I've been speaking here, how it applies on a real life chart. The chart. Okay guys, this is a chart on the dollar index, right? And looking at this particular chart, you can tell that we are on a downtrend. You can see price breaking structures to the downside. Price is constantly breaking structures to the downside, okay? Now, let's take for instance, you come into this chart and you want to take a trade after the last break of structure, which is this one, okay? This is my order block right here, and we all know what an order block is. And this very long candle here is an imbalance candle, and I want to be taking trades from this particular order block. But something is lagging right here. There is no liquidity for us to say, okay, this order block is a valid order block. And sometimes price might decide to use your order block as liquidity if there is no liquidity currently found on a chart. That is why sometimes you just need to allow your trading system, allow your plan to align before going into any chart. Now that there is no liquidity on this chart, let me play this chart forward. Now you can see something amazing. We now have liquidity, and this is an example of equal high liquidity. You can see it here. This is an example of equal high liquidity. There are traders that will say, price has formed a double top. Let me start looking for selling opportunities. But for those traders that will wait for price to mitigate their order block before jumping in, are still patiently, their pending orders are right here. They are still patiently waiting for price to come and mitigate that order block before they start looking for entries. And what happens? Now, this is an example of an equal high liquidity. Smart money will want to come and take out, looking at this particular chart, there are people that have placed pending orders here that price is going to use as liquidity, hit them out for a stop before dropping in the anticipated direction that price is meant to go. Okay, now what happened? Let's play this forward. You can see that currently now price has grabbed liquidity. Now, if you had any pending order right here, you have been stopped out. If you have any stop loss, if your stop loss were above here, you have still been stopped out. And that is the reason why a lot of traders will be like, why will I take a trade and the market will hit me out before going in my anticipated direction? Now, what happened after this liquidity was taken out? Price now dropped all the way to the downside. Okay, now this is an example of equal high liquidity. Let us look at an example of equal low liquidity and trendline liquidity. Alright, I will be making use of Euro JPY to show you how equal lows play out. You came into the market as a trader, okay, and it is visible that we are on an uptrend. You see the market constantly breaking structures to the upside. Now, there are traders that will be like, this particular zone here is a very strong zone. They will now start using this zone as support. They are going to draw something like this, expecting the market to do what? Come back into this zone. They might have placed pending orders here, and usually once you place a pending order here, your stop loss are below the low. Okay, your stop loss are below here, and you are expecting to hit profit target. Now, what happens? Look at what happens. Price starts dropping to the downside. You are waiting to enter this market here to push price upward because you feel this particular zone is strong enough to hold price. Okay, now this is what smart money wants. They know that a lot of traders will place pending orders here and their stop loss will be below here, so they want to buy at a very cheaper rate. Right now, they are going to take out all the whole stops that are below this zone. Right now, where is the best place to buy from? You can see we have an order block here, and what makes this particular zone an order block? This is the last candle before the impulsive move that caused a break of structure. And as you can see that we are on an uptrend. Okay, so smart money traders will be waiting to take price here, right? While gullible traders and new traders will be looking at this zone as a very strong support zone for price to come back and retest here before for them to start buying. Now, this is what the smart money traders will do. Place their order here, stops below here, okay, and they are targeting this high. They are targeting that high, okay. And what happens? Let's play this forward. Now, immediately traders see that price has broken this zone, they will start looking for a retest to this zone before they can start selling. Forgetting that we are still on an uptrend, some of them will start looking for price to retest this particular zone. They are going to place stop loss above those zones for them to start looking for selling opportunities. Moreover, price has taken out that high, right? Price has taken out that high. They will start looking for ways to enter for a sell. And what happens? You can see price gave them the hope that it was going to drop, mitigated the other block that was below here, and started pushing up. Now, they would have lost money while trying to buy this market and at the same time lost money while trying to sell this market, right? Why? Those that understand the concept of liquidity already knew that this particular zone here was not support, but liquidity that has formed here, waiting to take out traders. Okay, so that is how I have been able to show you equal highs and equal lows. Now let me show you how trend line liquidity works. All right, this is just a concept of how trend line liquidity works. We've been able to see equal highs liquidity, we've been able to see equal lows liquidity. Now let's look at a trend line liquidity. Now you come into the market and you can see the market is printing structures to the upside. We have consistent break of structures to the upside. And for so many people that love using trend line as their entry confluence, right? They will draw a trend line like this. What are they waiting for? They're expecting price to come back into this trend line. Then they will start looking for buying opportunities, ignoring the fact that there is this particular zone here is acting as an order block. Why? Because we have imbalance currently seated here. And aside that, we also have another order block here acting as, we also have another zone here acting as an order block, right? Now it's either price will either retrace into this zone or retrace into this particular zone. But if you are somebody that have been following me for the longest, you should understand where I will be waiting for the market to play into. It's simple. I will just have to take out my Fibonacci and wait for the best place that price is going to mitigate. And I love going for the 0.78, that is the 78% retracement zone. I use this both as my fib and my discount zone or premium zone, as the case may be. So if I was expecting to enter this market, I'll be waiting to buy at this zone, right? But what happened? Let's say I placed an order right here, expecting to go long from this zone after a clear break of structure, right? I was expecting to go long. Now, those trading trend line will be expecting the market to come back into this trend line so that they will start looking for buying opportunities. Now, let us look at what price did. Let's fast forward this. You can see that price has taken out their stops. If there were stops below here, price has taken it out. And what happened? Price dropped all the way down here. That is how liquidity works. Your ability to spot liquidity in a market is what will give you higher winning rates, right? Now you can see that price reacted off this particular order block, ignoring this particular order block. But this was the order block I was waiting to take price from. Why? Because I have other confluences that told me that wait for price here. And I will not say I'm going to jump into this trade because I want to take a trade, I must take a trade. No. If price doesn't meet my entry criteria, I'm going to as well stay out of that trade, okay? So you can see it tapped this first order block here and gave full TP, right? Now you've understood how trendline liquidity works, equal high liquidity works, and equal lows liquidity works. So you should also practice because they say practice makes perfect. Practice, and if you have any question, you can drop it at the comment section and I'll be happy and always there to answer you. Okay, so drop in the comment section which other videos would you guys like me to drop next. But for now, stay tuned and stay blessed.